So in this video, we are going to use ICTs, concepts, and daily bias to help us get into a trade alongside other concepts such as smart money and general price action. So let's get straight into it. Let's start off with looking at recent price action on EURUSD. So on the daily time frame, what we can see is we have this structure where we've been moving to the upside and we have large imbalances to the downside. I remember from ICT that imbalances tend to get filled. They don't have to get filled straight away, but they tend to get filled anyway. So if we look at where price is here, we can clearly see we are somewhat overextended to the upside and we can expect some sort of pullback. And this pullback here is quite a small pullback, but we expect some type of larger pullback in the coming days. And judging from this candle here, so we had a strong bullish one, another strong bullish one, and then we get quite a weak closing bullish candle, and this for me was a good signal that price for the next day is likely to be bearish. And if I skip to the next day, we can see that is true. So let me just go back to that day and let's get started. So if I just mark out this imbalance here, what we can see is that we can essentially aim for this area, and now we are understanding that if this candle closed bearish, weak bullish, sorry, and we were in an area where price previously rejected, so over here, here, and here, and essentially here as well, then if we get a weak bullish close like we did, then we can expect the next candle to move to the downside and fill this imbalance over here. So that's essentially what the basis and the bias for the trade is, and that's why we have the daily bias for the next candle to be bearish. Now dropping down to the 4-hour time frame, what can we see? So this is that daily imbalance that we saw before, and we can see that price again is looking overextended, but we want price to move to the downside. Essentially that's our bias, and we can see that from here we have liquidity in the form of equals that was taken out by this high here. So now we know that price is taking liquidity and it's formed an imbalance, and now we know that below this wick here, we expect imbalance that should be filled. So let's jump down to a couple more lower time frames and see what we can see. On the 1-hour time frame, we can see we have some sort of structure forming, but not the best. And dropping down to the 15-minute time frame, we can see we have that same structure that is indicating a potential market structure shift or a BOS or something like that. So from here, now we do get actually a good amount of information, especially using this indicator. We can see that the Asian session created the high that rated this high, and then we got the London continuation, and then a New York sort of reversal here, and then price in the dead session is moving sideways. So what we're going to do now is I'm just going to move forward to the Asian session of the next day. All right, so at this point we can see that we have more information in front of us. So very clearly we have liquidity here, and if you've watched my previous video, you'll know that this is very important liquidity. I'll tag that video in this video, but we've rated this liquidity with this Asian high. So we've actually rated this one and this one, so that's London high and New York high of the previous day, and now price looks like it's moving away. And when we did that, we actually left this supply zone here, which I'll mark out, and I'll move to the right. And now this supply zone is going to be very important, and you'll see why as price approaches it. And then what I'm going to do is I'm going to drop down to the 5-minute time frame, which is my favorite time frame. What do we know so far? On the daily time frame, we know we can expect price to move to the downside. We also know from jumping down to the lower time frames, such as the 50-minute time frame and the 5-minute time frame, that we've actually raided buy side liquidity. So price doesn't really have a reason now to continue to the upside, and instead should just continue to the downside. So now our bias is short, and now we're looking, or should be looking, for short trades. And that's why in this example I am looking for a short trade, and that's why I've drawn this supply out. So if we're looking for a short trade, we need to see some confluences, right? So first we need to find or see imbalance, and we can see that just here. So we have imbalance before our supply zone. That's a very good confluence. And we need liquidity, and we have that right here, also known as maybe inducement if you use that sort of terminology. So now we have imbalance and liquidity present before our supply zone, and actually on the 15-minute time frame our supply zone looks a lot cleaner. On the 5-minute it's just a couple of candles. So now what we can do is we can actually set a pending order at this point here, stops just above, so that's 4.5. let's go 5 pip stop. And now where do we target? So normally I could probably target Asia low, or we can target this low here. But because we know price wants to come into this daily imbalance over here, we want to look left and see, do we have imbalance close enough to this imbalance? And the reason being is because we want to take a trade that has a decent risk to reward and take off positions at this point, such that we don't try and chase a mammoth trade and then end up getting stopped out or getting taken out of break even or something. Because remember, sometimes price ain't just going to reverse from where you take an entry from and then continue all the way down. We know that price likes to mess around as well. So at this point, that's our trade. So let me move it about here. That's where we're going to exit. So on this imbalance that we can see here, I might as well mark that out as well. So there's the imbalance, and now all we have to do is wait for price to come through. So let me just play it. We get tapped in very nicely, and at this point we're actually happy with a small stop, because if price violates this high, then the whole argument and confluences behind the trade is also invalid. So having a small stop loss like this is actually very justified. And then as you can see from the trade, we actually get a nice 7.3R trade just from this. I'm pretty sure price does continue from this point to the downside, and as you can see, we get some massive retracement that we were able to avoid. And there you go, some of that daily imbalance started to get filled. So let me zoom out a bit. As you can see, we have all of the confluences on display here. So as a quick summary, we have price made a high, which we knew should get some sort of pullback, and then we get these equal highs that got raided by this high here, and then we get some inducement over here on the lower time frames at this point with an imbalance. Price comes in, taps in to this supply zone, fills the imbalance, raises the liquidity, and now that we've taken out buy side liquidity, the only type of liquidity we have left over is going to be sell side, which is here, and we get this imbalance that was in here filled as well. And then what does price do? It delivers very nicely and then starts to drop into that daily imbalance that we were looking for due to our daily bias. Thanks for watching. I hope you enjoyed this video and it's helped you in your trading, or does help you in your trading. Make sure to like, subscribe, and I'll see you in the next one.